I don't know about you, but I'm exhausted. I mean, the action's been unreal today. And portfolios have swung to such a dramatic degree. We are adding alpha today. And it is because of our quick action to recognize what's going on in the market and continue to lean into the areas of the market that are making us money and cut out the rest. We're following a strict stop loss discipline. This is the ARMR investing way that I'm sharing with you, right? So we build our whiteboard, we use our algorithms to execute, and we use stop losses to protect ourselves and help manage the risk. So there's so much to go over. I'm going to just go to the videotape and we're going to go look at chart patterns. Let's look first at what we've exited, and then I'll share with you what I'm adding and what's on the runway to be added to the portfolio. All right. So don't forget, I'm sharing my own personal experience. You guys have to determine for yourselves what positions fit your risk profile and your goals and all those types of things. That's a day trading screen of the indexes. The S&P's up here. Now, I wrote to you all in the Slack room at around 12:30. The ARMR algorithm put in a significant high probability buy signal. So I'm going to show you what that looks like. And that's why I put a bunch of capital back to work. So in the morning, as things started to crater, we got rid of our steels, our autos, basically your industrials, because the Dow's breaking down, and we exited the Dow out of the index only portfolio. So let's start there. Let's start with what we exited. Okay. So what happened this morning was the Dow took out the 50-day moving average. Okay, that's the daily chart. You can see when the Dow took out the lows of yesterday, I gave it room to the ARMR. This light blue line here is the ARMR average true range low of the day. So it's already violated yesterday's low, but I gave it a little bit more room to the ATR. It bounced, as you can see, and then it failed. When it comes down through here at 11 o'clock, it's over. Have to exit the Dow trade. It's been an unbelievable ride for the Dow of outperformance. That's a double top and a break below the 50-day. Now, the whole thing could hold up, reverse, and skyrocket tomorrow. I don't know. But for now, that position is out. And so what we had to exit from the portfolio, we don't have to exit it, but we booked a huge gain in Ford. It was a nice run. I'm using a very tight stop, which is the 14-day moving average, this chartreuse line right here. Okay. Then when it takes out that level, and again, if we look at the intraday pattern, you can see what I'm talking about. Gap up on good news, up 2.5%, fails right at the ARMR moving average, the yellow line, breaks below yesterday's lows and the ATR, and the trade's over. That's it. Trade's over. Done for me. Now, it could come down, set up all over again. I'll buy it back. But for now, with the Dow breaking down, I'm getting rid of Dow industrial type stocks. And if I'm going to sell Ford, I'm selling GM. I'm booking profits, guys, on all of these trades. Just like we did in the precious metals 2 days ago, right? More than 2 days ago. We booked profits. We took money off the table when we hit targets up here on the precious metals, and we exited here on this day, right here, right? 14th, we broke below these lows, and we said, that's it. I'm using the 25-day moving average, the brown line, as my exit. When it takes out the lows of the prior week, we're done on this trade. And it happened to do that in front of the Fed meeting, which saved us, from the implosion that they're suffering now. So out of the autos, out of the steels, out of the Dow itself. And I just exited Intel just to raise some cash. So sometimes I go last in, first out. When things start to implode and I'm looking to raise cash, I go right to what I just added. So I just took Intel out for now just to take a break there. I might come back into that, but it would have to close above the high of yesterday for me to put that trade back on. Okay. So that was the reason for the exits in the morning. We came into the day 20 to 30% cash. Then all of a sudden we were 30 to 40% cash, booking profits, cutting losses small, protecting capital. Then this is what happened at 12:30. Now you hear me talk about 11:30 all the time, but sometimes the market wants to do 12:30. I can't help it. That's when it does it. So Stephen asked, "Is this a crazy Ivan?" And I said, "Oops." And I said, "I think there's something, more sinister at work." All right? Because after 11:30, the market was imploding. So I just want to zoom in here so you can see what happened. So this is the S&P. So typically I see this type of collapse in the first 2 hours of trading, not into 12:30, right? And look how now we talked about this in the morning call. This orange line here is the third standard deviation below the ARMR moving average, the yellow line. This is the third standard deviation above. They're pinching down. It means there's an explosive move coming one direction or another. We don't know yet which. Okay, so when it plummeted below, sometimes that's the beginning of an utter collapse. And so I said to you at that point, Stephen, I don't know what's going on here. This looks ugly to me. Breaking below on volume, the ARMR moving average, the ARMR third standard deviation, the average true range low of the day. This looks like a disaster. And then we have these beautiful white bars that are painted on this chart. That's a simple show me study on TradeStation. It would be unfair to call it an algorithm, but I guess it is. I had to write some code to get it to do this, right? But very rudimentary, very simple. Right here, we had two yellow bars too. I thought that was going to be the bottom of the day, double bottom at a higher level. Instead, it had to go take out the lows of yesterday and then reverse with the four white bars up, which is generally a very bullish sign. So when I got that set up, okay, and looking over here at the NASDAQ 100, and we see massive leadership in the NASDAQ 100. So when the S&P was giving that setup at 12:30, look at what the NASDAQ was doing. Two yellow bars, so that's a different type of paint bar study, reversal, and a 3-bar reversal, 1, 2, 3, back above the VWAP, all at 12:30, confirming this action on the S&P. Okay, notice how both average true ranges, both the high and the low, are even. The low moved up so aggressively, it was equal to the average true range high of the day. And that's where we got the reversal. It doesn't get better than that. So you put those two pieces together and we started buying stocks. So where did we go? We leaned into the areas that are working for us.